Did you know there's a big difference between a peril and a hazard in insurance? Most people use the terms interchangeably, but in the insurance world, that tiny difference can determine whether your claim gets paid or denied. Let's break it down in simple terms. Insurance often feels like a maze of technical words, but at its core, it's built around one simple question: what could go wrong? That's where perils and hazards come in. They're two of the most important concepts in general insurance. Understanding them helps you know exactly what your policy covers and what it doesn't.
A peril is basically the event or cause of loss. Think of it as what actually happens to cause damage or loss. For example, fire is a peril. Theft is a peril. Windstorm is a peril. Flood is a peril. When you look at your insurance policy, perils are the things your insurer promises to protect you against. They are the risks named in your policy, or in some cases, all risks except those specifically excluded. Imagine you come home after a long day and find your living room flooded because a pipe burst while you were away. The burst pipe and the resulting water damage, that's the peril. Now picture this. You're stopped at a red light and another driver rear-ends your car. That collision is the peril. Let's say you run a small bakery. One night, a fire breaks out in the kitchen and damages your ovens and storefront. The fire itself is the peril. So whether it's your home, your car, or your business, the peril is simply the event that causes the damage or loss.
Now here's where it gets interesting. A hazard is not the cause of loss itself. It's something that increases the chance or severity of a loss happening. Think of hazards as the conditions that make perils more likely. If your home has faulty wiring, that's a hazard. It doesn't cause the fire directly, but it increases the risk of a fire happening. That fire would be the peril. Driving around with worn-out brakes is a hazard. It doesn't cause an accident by itself, but it makes a collision peril much more likely. Suppose you run that same bakery, and you often store boxes near the ovens. That's a hazard. It increases the chance that if a fire starts, it spreads quickly and causes more damage. So, hazards don't directly damage your property, but they set the stage for perils to happen, or make them worse when they do. In insurance, hazards are grouped into three main categories. Let's break them down with real-life examples so they're easier to remember. Physical hazard, something tangible you can see or touch that makes a loss more likely. Example, a homeowner has loose, broken steps on their front porch. That's a physical hazard because it increases the chance of someone falling and filing a liability claim. Moral hazard, when someone's behavior or intent increases risk, usually on purpose. Example, an employee intentionally inflates the value of stolen items in an insurance claim. That dishonesty is a moral hazard. Morale hazard, when someone is careless or indifferent because they believe insurance will cover them anyway. Example, a driver leaves their car unlocked with the keys inside, thinking, it's fine. If it gets stolen, insurance will pay. That attitude is a morale hazard. So, physical equals condition. Moral equals intent. Morale equals attitude. So why should you care about perils and hazards? Because your premiums, your claims, and even whether you get insured in the first place all depend on them. Insurance companies assess hazards when deciding your rates. The more hazards you have, the higher your premium. They also look at perils to determine coverage. If a peril isn't listed or is excluded, you won't be protected. Example, you live in a flood-prone area. Flood is a peril, but in most standard home policies, it's excluded. You'll need separate flood insurance to cover it. Meanwhile, if your house has poor drainage, a hazard, insurers may charge more or even decline coverage unless you fix it. Let me tell you about Sarah. Sarah owned a small bakery. One night, an electrical short circuit, caused by old faulty wiring, sparked a fire. The fire itself was the peril. The faulty wiring was the hazard.
Her insurance covered the fire damage because fire was a covered peril. But because the insurer had previously noted the faulty wiring during inspection, her premium had been higher. The hazard didn't deny her claim, but it did affect her costs. That's how hazards and perils work together in real life.
Here's the big takeaway.
Perils equals what causes the loss.
Hazards equals what increases the chances or severity of that loss. Knowing the difference helps you read your policy with confidence, spot risks in your home or business, and make smarter insurance choices. If you found this breakdown helpful, hit that like button, share this video with someone who's ever been confused about insurance, and subscribe for more plain English explanations of risk, coverage, and everything in between. And remember, insurance isn't just about protection. It's about understanding the risks before they become losses.